The futures market just got another test of that 200-day moving average, and we saw some bounce happening. So what are we going to do? Are we going to rally from this point and get some kind of short squeeze or up move, or are we going to crash tomorrow? First of all, sorry, my camera's a little glitchy, but you don't need to look at me, okay? Look at the screen here, and we can look into what we have tomorrow, which we mentioned a few days ago would be very, very important, and that would be non-farm payrolls and unemployment. And the thing about this is this number right here can cause extreme volatility tomorrow. So we have the SPY on the daily here, and I just want to say we are starting to buy up from that 200-day moving average, and we are seeing a lot of stocks that look very good, but we want to be careful with this type of stuff because we are moving a lot because of the data that's come out. And tomorrow we have unemployment and non-farm payrolls, probably the most important piece of data that we're going to get this week. Now, if you were subscribed yesterday, all we were talking about was this 2-hour divergence here, okay? So we do have 2-hour divergence, meaning that the momentum is dying out to the downside and we could see some type of bounce. But what did I say last week? Last week, I told you guys that we need, with these divergences, some kind of good news to give us a big bounce, and that could be the unemployment or the non-farm payrolls coming out tomorrow morning. The important thing is if this number does come in good for the market, that we could see some sort of bounce, and how high could that bounce go? The monthly expected move is kind of what I'm paying attention to. That's this yellow line right up here. So that is the monthly expected move priced in from the options for the whole month of October. So if we start to get up in that area or even outside of that area pretty quickly, that's when we want to start looking at shorter time frames and seeing if there's any momentum dying out and looking for maybe a piece of bad news around the corner. The bull case is obviously we're just going to come up and see some kind of short squeeze or some kind of rally to get us up in these areas. And then around here, we just want to be looking, there could be just a pullback and then we start to extend to higher levels. But we also could see that date of October 12th start to line up with some highs, or at least some slowing in momentum. And then I believe that October 12th will be very important with that CPI coming out next Thursday. To get the bearish side for the SPY, I just want to pay attention to the Qs, okay? The Qs are not falling down to its 200 like the SPY has been doing. So we just want to pay attention to the Qs because the SPY can cut that 200-day moving average if the Qs start to close below its support or its little trend line going on here, okay? So if you just look over here, we can see that there's not a whole lot holding the market up in this area. And the next point that I have marked is down there at that 321.29. So we do have more downside possible here. We just want to be paying attention to that data. If we look at the Magnificent Seven, they're looking pretty good, and we're going to touch on a couple of those, but we did want to pay attention to on the Qs, our left, our head, and our right shoulder we've been talking about, and we're looking for some confirmation of this move to go higher. Overall, we just want to be paying attention to that number in the morning, okay? If that number comes out good for the market, we're going to see those yields come down, we're going to see the VIX come down and close below the 200 and things like that, so we can start to see this start to play out to the upside if we do get some good news. Now, if tomorrow's news comes out as bad news, and maybe this is your bearish case, we could see an actual touch of the bottom of that little triangle that I showed you guys on the daily here. So we want to be paying attention to the bull side or to the bear side. If this little trend here starts to break, I already showed you there's not a lot holding us up once we start to close on the daily pretty much below this low. One of those stocks that looks pretty darn good is Apple, and we are seeing a full confirmation of the divergence that we talked about yesterday. So please subscribe because we did tell you about this yesterday. We saw this divergence here and now we're seeing that full good green bar. I usually like a good green bar before I start to say the divergence is playing out, but we can notice that that divergence also shows up on the RSI as well, and it's pretty dang significant. So we could see this thing start to run as long as we get some good news. As far as how high Apple could go, it depends on how good that news is tomorrow. I believe tomorrow's news will set the tone for the next few days, and we could see this pop up to its 50. We still got to get above that, but I believe if we get above the 50, then we're definitely going to go fill this gap, and then possibly we could even end up right back in our resistance zone up here in the little white grayish box that would come up to our gap fill somewhere around 191. Tesla, at this point, I would encourage you to go draw this big triangle on the daily just so you guys can have that on your charts. But we're going to break it down to a 1 hour real quick because we were stating yesterday how we are starting to get to those overbought territories and what starts to happen today was we actually came a little bit higher. We filled that gap, not on a closing basis, but we did fill that gap. And I overall said that if we did get up into here, then we could see some kind of pullback. Okay, so we still could see more pullback in Tesla in the near future because this was a pretty big move. We could see this start to consolidate and start to get tight, and then maybe that's when the next big move happens for Tesla. As far as the bear case goes, that news tomorrow could come out as bad, right? And we could see this start to fall pretty quickly. Overall, I'm paying attention to this little trend for the bear side, okay? It's not the best trend in the world, but sometimes these little trends can save you, okay? So if we close below this level and we close below the 50, I think we are most likely going to at least test this low. And if we do break below that low and close on a daily basis, I believe we are going to go to the bottom of that triangle. So that's why I encourage you guys to go draw that real quick. Maybe just rewind a little bit, pause it, and draw that real quick on your chart if you're trading Tesla. If we do want to go higher right away, I would be paying attention to the top of our triangle. Okay, so that's why it's very important to draw this right now, because we could see Tesla start to kind of move pretty quickly. And overall, I mean, something cool that you could actually draw out here is maybe this is your big cup and now you need a handle and then you could go to the top of there. But I think that's where you're going to start to run into some resistance right around that trend line. NVIDIA looks good because we did say right around here that this looks like it's just a pullback. Okay, we're not breaking below that 50 on the hourly, and we are probably just seeing a pullback because we did go up 10% in like 2 weeks. Okay, you need pullbacks to see health. This is not an unhealthy pullback, unhealthy move by any means, because we are seeing this pullback, and maybe we get one more dip down, and then we can see that A, B, C pattern play out to go fill our gap and possibly give us that right shoulder. The bull and bear case, we do kind of have to go to a daily chart here. On the bull side, the most up that I think you could go before you see some pullback or a bigger pullback would be a touch between these highs here. Okay, this little trend here, we could go all the way up to somewhere around, I mean, it could go up to 520 if it wants to be really, really bullish. Now, overall, my theory on this is that we are going to see some sort of ABC on that shorter hourly time frame. We're going to come up and create some kind of right shoulder that kind of matches this high over here. Maybe you get that little lip, and then you want to be paying attention to when this breaks on the bear case. Now, Amazon's another one that we've been paying attention to, and it looks pretty good. I mean, overall, we wanted to see if this would form a left head and a right shoulder. We called that right around, I think it was like last Thursday. So that actually is forming here, and we do see some little wedging starting. So if that news does come out bad tomorrow, look for buyers to be sitting right around this low here. But if we close tomorrow on the daily below this this low here, then we could start to look back at the Qs and see that the Qs might be closing. If there is more damage in other stocks, the Qs could be closing below that low that I told you to watch out for. The bullish case on this is that we actually fully go up and complete this head and shoulders. Okay, so I believe that's the overall move. And as far as how high this could go, we have a gap fill, gap resistance and gap fill above us. So right away, I'm going to be paying attention to 131.96-ish, and then we want to pay attention to the gap fill at 135.35. These yellow bars are the monthly expected move for Amazon. So if we do start to get outside of these yellow bars, then I will be a little bit weary, because a lot of the time when we get outside of these zones, especially if we do it pretty quickly, like towards the beginning, middle of the month, then we do like to pull back into this zone. Doesn't necessarily mean that we're going to crash right back down. It just means that at the end of the month, we could see this start to pull back into it right in between these yellow lines. Why we're not getting a big pop in the entire market as a whole would most likely because we're not really coming off of our high on these yields very quickly. So this is the 10-year yield, and we've just been stating for the past week, 2 weeks, that this thing is going parabolic, and if we keep going higher and higher and stay up in these areas, we're going to see more pain. Pretty much once you get up in these areas, you're just asking for something in the system to break, and we don't want that to happen. So we want this to come off, and something that can do that very quickly is data. Okay, so tomorrow's data is going to be very important, and I would pay attention to how yields react off of that data tomorrow morning. TLT did a whole bunch of nothing, honestly. we didn't do too much. So those yields did not come off enough to give us some kind of bounce in TLT. And you notice actually TLT is coming down a bit lower, even though the 10-year yield actually did come off a little bit. So we would have liked to see this kind of create some kind of wick and start to show us a green bar. That didn't necessarily happen. I still think there is potential for us to set up some kind of head and shoulders here to the upside, but it may mean that we need to go visit that point of 82.50 before that can actually happen. I did just show you a bunch of charts that look pretty good. I mean, honestly, things do not look horrible. So we want to really be paying attention to the VIX. Okay, the VIX is still above its 50. The VIX is still above its 200, which is just asking to get above 20. Okay, we've seen this thing pop above 20 a couple times now, so don't be surprised tomorrow if that data does come out bad for the market and we do see, you know, non-farm payrolls and unemployment actually being bad news for the market, meaning that this thing can start to stay above 20. And what we're overall looking for on the VIX to see an overall crash is a strong closing bar above 20. And then what we're looking for to the or I guess to the bullish side on stocks would be we want this to break its most recent trend and go get another retest, or even come all the way down and fill this gap on a closing basis, and then fill this gap down here. That's just a gap from very far back. You can see on the 2-hour, we're not, you know, in overbought conditions anymore. There's no divergence here. I mean, there is overall on the 2-hour here, but you need this little trend here to break to get some direction. This thing, now that it's down here, if this thing crosses above this 50 line on the RSI, we can see this thing start to skyrocket and even go ballistic if this data tomorrow is really bad. So I want you guys to be very careful. Same thing goes for the VVIX, but also on the VIX, we could just see another push with even a gap down or something tomorrow, and then maybe that actually starts to fade throughout the day. But on the VVIX as well, that is the volatility of the volatility. It's something very good to pay attention to. Sometimes the volatility of the volatility will go up, and you will look at the VIX and it hasn't gone up at all, and that's a good signal that volatility is about to enter back into this market. Right now, though, we're waiting for this trend line to break so that we can go and test these types of levels down in here. Okay, so the overall takeaway for this video is that we're actually bouncing again. Okay, we're bouncing a little bit. Stocks don't look horrible, and we are actually seeing some strength in the Magnificent Seven. So we could see some kind of short squeeze or some kind of, you know, bull run over the next couple of weeks. But we want to be paying attention to the data. The data is really moving this market, so we want to pay attention to what number comes out. But also, more importantly, as we say, we want to pay attention to how the market reads that data. Thank you guys as always for watching. Please like and subscribe, and have a great night, and good luck trading tomorrow. Peace.